Where are the markets, and how much difference does the tax bill really mean?
We continue to think it doesn't mean that much, because if you take a look at markets, right, and you try to look at the forest through the trees, right? So what are the trees, right? Positive earnings growth, low interest rates, positive GDP, valuations that with earnings growth expanding will flatten out. It's a pretty darn good environment. And akin to 2017, as you look at 2018, it's pretty much the same thing, right? So our primary theme for investing right now, just to put some perspective on it, is rinse and repeat. And so, yeah, it's going to be great about the tax cuts because we need an overhaul with respect to corporate taxes. But this is about confidence. And it's about restoring confidence not only in the art of equity investing, but America. You know, the U.S. has been down really since 2000, 2001. It's a whole plethora of things that have been going on since then. And we're so focused on the now, we've kind of forgotten where we've come from.
Okay. I feel like I want to push back a little bit on that.
Oh, I love it. Bring
because I feel like if you look at the confidence surveys, confidence has come back. That does not seem to be the problem. I would argue that a lot of people say we might see shares do well. Yes, because these companies are going to get a tax break. That doesn't mean that necessarily growth is going to be so much better, but rather we're going to get turbocharged next year, as Adam Posen was saying yesterday, and then you're going to have a faster crash, a sugar high, and then a faster...
Sugar high. Okay, well, here's what I would say. This is where perspective and experience comes through. In no other time in my 28-year career, are investors doing one thing and saying another, or saying one thing and doing another during meetings. Companies are doing the same thing. My wife's grandma taught me this really cool word, bunk, okay? Surveys are bunk. It's what people actually do, okay? Now, from an investor survey situation, when portfolio managers are on surveys, they're never going to tell you what they're doing, okay? In a meeting on 101, I just published my year ahead piece November 17th. Since then, I've had over 100 meetings with institutional investors around the world, okay? They're saying one thing and doing another. I can tell by my interactions. I can tell by the relationships that I have with these portfolio managers with over 20 years, for the last 20 years, okay? Surveys don't matter. It's what people do. Now, do I think that corporate America needs a kickstart? And this is part of the confidence. Do I believe that corporate America tomorrow is going to start spending more money? No, because for the last 20 years, they've been building up cash, cutting costs, firing us, taking down capacity. It's going to take several quarters before they actually want to add capacity, when they will feel the less taxes on their businesses. So that's why second half of next year at the very earliest, probably 2019, before you really start seeing the more consistent growth. Remember, the whole thing with America in terms of fundamentals is that they've become, earnings, cash flow, have become exceedingly consistent. We're not seeing a variability of earnings growth, very consistent. If you're an investor, you actually start to feel better about that versus the 90s, which was, high beta, go, go, go. And we've seen a fundamental transformation of corporate America.